Hey guys, welcome to another session of the Elevate Career Discussion. I am super excited to have today with me Olivier Babin. We'll get to kind of Olivier's background in a second, and we have a very very interesting discussion planned today around venture capital. So super excited to have him. For all the new folks listening in, obviously Elevate, these career discussion series are discussions with folks in the industry. Young professionals who've had accelerated career paths and been successful in their kind of career path, but then kind of want to come back and share with the folks here their experience within the industry and the lessons they've learned. So we're super excited to have Olivier. I'll have him do a quick background, but I worked with Olivier at Goldman, a few years back, and then today's all about, we'll dive into venture capital and give an overview of what it is. What do you do day to day? How do you, think about the job as part of your career? What are the things what are the skills you learn on the job? And then how do you, potentially recruit into something like that? And then Olivier will then spend some time on his background as well in investment banking, where he started out his career, as well as things he's done through, his undergrad, et cetera, to position himself successfully. So yeah, thanks Olivier so much for joining. Yeah. And thank you guys all for listening as always. So why don't we start off with, an overview of your background, kind of what brings you, to Softbank and in venture capital.
Of course. Great to meet you guys. So I'm originally from Canada, born and raised there. Growing up, I think I discovered when I was like an early teenager that I was pretty interested in finance. Started reading a couple books around like biographies of famous investors, just around investing in general. Got hooked up. So when I was about to apply to college, kind of knew at that point that I wanted to do something related to finance. So I went to McGill University, which is back home in Montreal, at a pretty specific program in econ and finance. When I was in school, was trying to pursue everything I could that related to finance. So I was part of an investment club. We also had an investment group where we were managing external money. It was a student-run fund, so that was really cool as well. And then did a few internships while I was at school. So did 2 internships in sales and trading for one of the Canadian banks, National Bank of Canada, on the derivatives desk. So that was like my first 6 months in finance. Did not know much at the time. They just threw me in the water and told me like, well, you have to learn to swim. So it was a really good experience.
Yeah.
I did also an internship one of the summers at a financial conglomerate in Canada, working in corp dev and treasury. So it was completely different. By that point, I guess I was approaching my last year and my final internship. We can circle back, but decided that banking was probably a lot of you are thinking that banking was probably a good spot where to start my career. So went through the interview process and the recruitment process, ended up at Goldman and FIG, where in Kaushik. It was a really, really good experience. Had an amazing summer. So obviously decided to go back full time when I got my return offer. I moved to New York and then spent almost 2 years in the FIG group at Goldman. And then earlier this year, made the transition from Goldman to Softbank here in San Francisco, working in the Softbank Vision Fund, or a large venture capital growth equity fund. And it's been really good so far. So
yeah, that's awesome. No, thanks for the background. I think it's super helpful. We'll dive into a lot of those, I think, experiences. Let's start with venture capital, right? Yeah. So what did you know about it? I think, for a lot of folks in undergrad, you probably don't know a lot about it when you're undergrad, but kind of what can you share about, what it is, what you actually do, what's the purpose of what you do, and specifically about, what you can share about your fund and types of investments that you guys do. Yeah.
So I think, the venture capital is investing in startups. You classify venture capital in like 2 different buckets. You have like the super early stage that does like seed, Series A investing, which are mostly startups that have just been created, that are getting early traction, but most of them are pre-monetization and a small team and trying to get a product market fit. And then you have the VC later stage growth, starting at like Series B and Series C, all the way to pre-IPO. This is mostly what I do. And so at that point, you have startups that you probably heard of, like at the pre-IPO stage, you had like Uber, Airbnb of this world, and then earlier stage companies in our portfolio of like Compass, Kitera, Clutter, for example, that Softbank has invested in. So, and so I spend my time mostly on the late stage side of the venture capital. What we do is we spend, probably in terms of how I spend my time, like a third of my time is spent meeting with companies, just having meetings with founders, entrepreneurs, getting to know their business. if we're interested in double clicking with them and we think there's a potential for us to fund a round and they're looking to raise money, and then we spend time over the course of a few weeks going through the due diligence process, similar to what you would see in private equity, probably slightly shorter,
Sure.
Given that the company is smaller and we try to move quickly and it's typically a pretty competitive process. Over the course of, let's say, 2 weeks to 2 months, we make our mind on an investment thesis and if we're interested, and then end up making an investment or not. And then, so that's, I guess, another third of my time. And probably the last part where I spend a lot of time is post-investment. We're pretty involved with our portfolio companies.
Yep.
So Softbank tends to write, if you're familiar with the fund, relatively large checks for the venture capital world. And so we tend to take ownership between 25 to 40%, which is higher than your typical VC fund that's going to take ownership between 5 to 20, 25%.
Yeah.
And so as a result, like we have board seats, we're pretty involved with the operations, so spend time with the management team on site with the company, thinking through their strategy, their pricing, their product, a bunch of different stuff. So coming from a finance background, that's one of the things that attracted me in VC. It's not only building financial models and figuring out if it's a good investment or not, obviously something that I like, but it's also post the investment, spending time trying to build companies. And I wanted to get exposed to that tech side of the equation and understand how you build a good product, how you build a pricing strategy, how you hire people. We help them with hiring. So
that's awesome. We'll dive into a lot of that. I think 3 things that I think it's helpful for the audience to know. One, Softbank, for those not familiar, is one of the largest venture capital / investors in the world. The numbers are out there, like over 100 billion, maybe more in terms of money, capital to spend. So that's one thing. Number 2, one thing Olivier hit on. Look, you're what, 3 years out of undergrad max, right? So I think 2.5, whatever it is. So I think the ability, some of these tasks and roles, and this is where kind of fitting into what you really want to do, I think ability that Olivier has in his role to meet founders and then kind of be on that core investing team that makes decisions based on based on those meetings and that analysis is pretty unique to get when you're 2 to 3 years out of undergrad. So one thing I tell, I think Olivier says the same thing, like diligencing these career paths and understanding like what your role is going to be and how much responsibility you're going to get a lot of times ends up being a differentiator in terms of jobs that you take. And for him, like that level of responsibility, and maybe you don't get that as much when you go to private equity or other types of investing that early stage. Maybe talk about that a little bit and how did you diligence that part?
I guess so. I was just going back when I was in banking. So started banking, like most of you guys was wondering what I wanted to do after that. Decided not to do the on-cycle recruiting. I know a lot of people jump into it and it's getting earlier and earlier. It's pretty crazy. I think this year was like third week of September, which is kind of insane. So you're barely 3 weeks on the job and then you're being asked to make a career decision. And so I was like, listen, like I worked pretty hard to get into banking. I want to give it a shot. I'll see if it's for me. And then like, I know there are going to be jobs out there and I'll take a decision a year later. So fast forward a year and a few months into banking, really liked my banking experience, but I felt like my learning curve was plateauing a bit, and obviously you work really hard in banking. Wanted to go back to investing more than like the execution side of banking, and so was obviously considering like the traditional paths of like private equity, hedge fund, and VC. And for me, I mean, all of them are investings, and all of them suit different personality. In terms of what I was looking for was not only a pure finance role that would allow me to like build investment thesis, build a model, but like connecting with the founders and having a level of responsibility where like I would go alone and take meetings with founders. Like I felt I needed that, especially coming out of banking where you're slightly less exposed to that. And so that's why, and I mean, putting that also in context, when I was in banking, worked on an IPO and really liked having like working with a slightly earlier stage company and going through that process of raising capital. And so I was like, oh, I guess VC is for me, but did not know much about VC. So bought a bunch of books about VC investing, used some people I knew at Goldman to reach out to other people, and then basically just starting at a call. Some people calling networking. I was just like trying to figure out what I wanted to do. And then one thing led to another. One of my VP at Goldman who knew I was interested in VC was like, well, by the way, I know someone at Softbank. I can put you in touch. Like I heard they might be recruiting. So they put me in touch. 2 or 3 weeks later, they were like, well, we're kicking off a process. And VC is more like, is less formal than PE. It's more like one-off in terms of process. The teams are typically smaller, so it's not like a very formal process. And so went into the process and then learned as I was going through the interview process about VC and convinced me that that's what I wanted to do. But it was really organic in the sense that I did not know, like coming into banking, that VC was what.
And then what do you think, like, what do you think VC recruiters were looking for?
Yeah.
You know, in terms of, I always tell people looking at private equity or other, you know, similar. By the way, folks have questions, you can email project@elevatelab@gmail.com for Olivier. I got a lot of questions beforehand, so we'll go through, you know, majority of those. If folks have kind of burning questions, we'll try to get to those as well. But, you know, as I tell people a lot in the PE side, when you're looking at candidates coming from banking to PE or just generally into investing, you want to develop that investor mindset, like how you look at companies from investors. And so what do you think, you know, now that, and we'll get to you now on the other side, recruiting folks into venture capital, but what do you think people are looking for in those interviews?
I think, investment acumen is definitely like something that you're looking for, like either a passion for investing or someone that like has a very thoughtful way of approaching it. I think the added layer, and people in VC come from different backgrounds. Like you have people like me that come from banking, but you have a lot of people that come from tech companies, that come from consulting as well. So people look into, like recruiters look into people that are interested in products and technology companies, following trends that's happening in the market in the tech world. So that's like the added layer probably that VC people are looking for. I don't think there's a cookie cutter like profile for VC.
Right, and then how did you prepare for the interviews?
I mean, I did not know. I knew a bit about VC, but I did not know much. So I read a bunch of books about like VC, how they look about investing. Went through the process of like, how does a VC investor, like what are they looking for, and like building like a couple of like pitch in terms of like framework about it, looking at it, at a model case study through my interview. And then the rest of it was just like showcasing that I was super interested in investing, explaining why I was interested in VC. So I guess some of the points I touched on. And that was it. It was like a fairly normal interview process.
Got it. And then you kind of we'll close the loop here on the exit ops or banking. It's kind of we're starting at the end here. But you mentioned, and we talked when we talked before, you know, the kind of how should candidates think about those exit ops coming out of banking, right? So obviously we know, let's say 60 to 70% of folks who go into banking or consulting, you know, maybe in a couple of years, you know, look outside to diversify their career. So we won't touch on PE as much, but kind of we talk about all the different, we talked about kind of potential opportunities within startups and things like that. So how should candidates and frankly people who are going through the first 2 years, 1 or 2 years of out of undergrad, think about their exit ops?
Yeah, I think it's like, I mean, there are a lot of exit ops, and I don't think there's a perfect one. I think it really depends what you're looking for in terms of like skill set that you want to build. And like, you're not forced, coming into banking is a great place, and banking is not the only place to start your career, obviously, but allows you to have a bunch of exit opportunities. And I think it's more deciding what you want and like not jumping. I think what I would be careful is not jumping too quickly and like, I need to recruit, like I need to leave.
Just because everyone else is doing it.
Just because everyone else is doing it. Like you can have a couple of my friends who went into startups, and like those process ended up like 2 years after or 3 years after they started banking, they were like, well, that might not be for me, and then recruited at that point and move on quickly. Some people started banking, they were like, I want to move to private equity, recruited very quickly, stayed another 3 years in banking, and then moved to private equity. Some people went the hedge fund route. Some people went in corp dev at different companies. So there are a lot of exits, and I think what I would recommend is like talk to as many people as you can. Just to get a sense of like what their day-to-day job is. People are gonna have very different opinions, and then you like internalize all of that. You can make decisions in terms of what's best for you. Right?
That's a good point. I think two takeaways there. One is really, I think, spending the time up front. And look, this is a journey, right? You don't have to get to the answer when you're in college. So it's a journey. Your first job is not your last job. And I always talk about this when I come on campus and talk to students. So don't put a lot of pressure on yourself. But I think the important thing here is really spending the time up front, learning about these different careers, and then figuring out, combining that with like what you yourself are good at or think you're good at, things that you want to build skill set on, and then kind of building those two, and then trying to make the best possible decisions possible. So maybe let's go back to undergrad and talk to me a little bit about you know, kind of a lot of the folks in the audience are looking at banking or consulting, right? So what are and you mentioned 1 or 2 internships. Like, I get a lot of questions from underclassmen, right? How do you get that first internship? You know, how do you get out there, you know, and maybe we'll touch on networking in a second, but how did you know, what is your advice for people looking for that first job?
I think building up to, if you want to end up in banking or consulting, like I think your first job is good, and I don't think it matters really what that first job is. In my case, I can give you my, like the way I got my first job, I was writing a project for school. It was a small thesis, and I was like, oh, I want to learn about like complex, like it was on a financial product, so I decided to learn about the Black-Scholes model, which prices derivatives. And then to do that, I reached out to a couple of ex-professors that were in the industry to understand. It was just like basically for my school project, talking to them And one of them met him for like 30 minutes, asking him about the back controls. And at the end, he was like, by the way, like connecting with you, like, are you looking for a job? I was like, oh, yeah.
Sure, sure. Where do I sign?
So yeah, he was like, well, like I would like you, and he was like a professor working in the industry, and he was just like, well, there's a research project that I'm interested in looking at. Like, would you help me write it? And I was like, yeah, that's fine for me. And then 2 days before I was about to start my summer writing the project with him, he was like, by the way, like I work at National Bank. One of the interns just quit. We have like a job opening like on the derivatives desk, like on the sales and trading desk, like in the middle of the trading floor. Like, do you want to do that? And I was like, yes, definitely. And so I spent 2 summers there, and that was amazing. Like that allowed me to get the next one and then get into banking. So I'll just say that like you never know where it's going to come from, and like be open, meet with people. It can be like in investment management, it can be in a company, it can be in sales and trading. It can be, there are a bunch of jobs that are going to have internships for people before the last summer. And then having that internship shows that like first you're interested in finance, allows you to like get it going and like experience what it is like to work in a professional setting, and helps you obviously to recruit for the next one.
Right. And how much did you like? You talked about kind of informal way of getting the job. There's again, this is a great example because there's just so many different ways you can land that first job. You just don't know. I think approaching it in these different avenues. How much was the focus when you looked at Goldman was on, networking and how did you, networking with people in the industry? Maybe talk a little bit about that and talk about what worked for you, what didn't work for you, a lot, because the context is a lot of the students will reach out to me and be like, hey, I'm not getting responses back, or I don't know I'm going the right way. Just maybe illuminate some of that.
I remember being in college and I was like, I hated the term networking. I was like, what is networking? I'm not a super extrovert person, so I don't want to go talk to people and like cold email people. I think there are 2 advantages, and you can call it networking. I think it's like you want to connect with people and understand what they do in order to like decide what you want to do for them. So like when I went and decided to go banking, I was interested in Goldman. I reached out to a few people, and my goal was to learn about Goldman, the culture, by speaking to those people. I don't think talking to those people helped me get in the interview process, but once I was in the interview process, having an understanding of what the culture was at Goldman, and you can only get an understanding of the culture's place culture by like talking to people, really helped me go through the interview process. The other thing I realized that I never noticed before is like your best network is actually the people you are at school. Like you don't realize it, but like all the people there are in your class, and once you're banking, the people that are your analyst class or your associates, like those people end up doing a lot of great things and like move on to jobs where there are opportunities, and like they're gonna connect with you, and you're obviously very tight with those people because you worked in the trenches with them. And so that's probably an even better connection than reaching out to someone who's like very accomplished, 45 to 50, you get a 30-minute like coffee with them. Like that person might be helpful, but might be less helpful than the person you spend 2 years in with college that knows you inside out. And so like when you think about building your network, it doesn't mean like going out and meeting with a bunch of accomplished professionals. It means like starting with the people that work around you, and like that network, like I was shocked like coming out of McGill, and so I went to McGill, which is not like a target school for a lot of the jobs in the US, but I probably have like 14 or 15 people in my class I'm very tight with. We're a fairly small finance program that are now all in New York or San Francisco, and I meet with them all the time. They're in, like, some of them are in hedge funds, some of them are in banking, some of them are in consulting, some of them moved to PE, a couple of us are in venture capital. So it's kind of cool, and like we're building up that over time.
It's really cool. I think thematic there, right, is you also kind of, it is a two-way street when it comes to kind of working with people and learning from them. But realistically, the peers that have been through the process, and the reason why I bring back a lot of young professionals who are 0 to 5 years out of undergrad is for that reason, is that you kind of learn from people who've just been in those shoes and kind of what worked and what not. And so it's kind of diversifying that. And how was your track record with like alumni? Like how did you go about that, or did you do a lot of it?
I did some of it. I mean, we didn't have a ton coming out of McGill, especially I wanted to move to the US, and like New York was top of mind for me. So they were like probably 3 or 4 of them that I recently graduated from McGill that I moved to New York, and I was like, that's probably my best shot. And like they went through the process fairly recently, like they're going to be open to talking to me, and they were all super responsive. Like as long as you have one point of contact with them, whether it's like through school, where you're from, like people typically, especially if you're asking them in a nice way, like you won't get 100% response rate, like definitely not. But people are open to it.
No, I agree. I think they're, again, it's part of diversifying how you reach out to people. But I think going through what I call this like zone of commonality. So whether it's your college, whether it's your fraternity, whether it's a business group, whether it's, you know, similar towns that you're from,
Exactly.
you know, whatever, like, I think people are more likely to connect with you. I think that's the first thing. And number two, bringing something to the table that says, hey, look, not just, hey, I'm a student at, you know, McGill, or I'm a student at Princeton or whatever, and then, you know, I want to talk to you, just be like, hey, I'm really interested in finance, or really interested in this thing that you did in your career. I'd love to learn more. Exactly, it's just do your homework.
Because, I mean, even now, I don't consider myself successful at all, but I get a lot of them at this point, and I just having that one point of contact, or like, oh, we looked in your background, like we like that you did this, or like went to McGill, or went to Goldman, or like.
Yeah. So I was just gonna ask you. So you probably get hundreds of emails, right? From McGill, from Goldman, from, you know, from people who are from non-target schools, from BC, whatever. So maybe let's take from the people who are looking to learn about your career or recruit with SoftBank. What determines, you know, how you respond back? Because you don't respond back to 100% of them, right? So you what maybe help, you know, people understand what types of things help you, you know, prioritize their email, respond back, you know, how do you follow up, things like that, things that are helpful for them to include.
I think, I mean, it depends. Like I'm gonna more likely to respond to emails than LinkedIn. I'm rarely on LinkedIn, so like the emails is my mind box. I'm gonna respond. If I have a point of contact with that person and they flag it in the email or the LinkedIn, like, oh, I went to McGill, saw that you did this and this, like would love to meet you, or like I was at Goldman and FIC, like saw that you transitioned to VC. I'm interested in doing a similar transition. So that's one. And then the other part, it's unfortunate, but like depending when you send it, like I totally sometimes I'm super busy and it's about week at work, and like it's not my priority to respond to 15 emails. So
let's just take this back maybe a year and a half when you were at Goldman. You know, next week we're gonna have someone who's actually an analyst at Goldman talk, but you know, to your point, we'll talk a little bit about your experience on the recruiting team at Goldman, right? So you were on the recruiting team, whether it's for FIG or for the analyst committee, et cetera. And by definition, you get a lot of people. And I tell students this, you know, when you network, it's helpful to know people at the firm and at the recruiting team, et cetera. So as a first year analyst, you're super busy. So what are things can students do? If you're trying, so I'm trying to get, you know, time with you to just chat about Goldman or investment banking. So would the same things kind of apply? Like right time of year, like right time of day, whatever,
Exactly. And like, don't hesitate to follow up. Like sometimes I won't respond to an email just because I'm too busy, and having someone, especially if you're doing it in a nice way, like 2 or 3 weeks after, by the way, reach out to you, like still very interested to meet you, and like connect, like not just sending me an email that I felt like you could have sent to like 1,000 different people, but like feel there's somewhat in connection. Like you're almost making me feel bad, so I'm definitely gonna respond saying like, I'm very sorry, I was busy. And like,
I agree with that. I think follow up. I've talked to enough people in the industry now where I think you follow up in a tasteful way 2 to 3 weeks out. Frankly, a lot of the bankers are looking for kind of the second reminder. You know, we don't do things the first time. Right?
I mean, it's the same thing for us, like especially in venture capital. Like at this point, I have a lot of founders and entrepreneurs reaching out to me, and like those people that are going to be successful at building a business are people that are committed and like will not take no as an answer. And like you like to see that when someone reaches out like 3 times and it's like, I think you should meet us. Like this is a really interesting business concept. Blah 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 blah. I think that's it's good. It showcases, especially if it's done in the right way. Like if you do it in an aggressive way or passive aggressive way, that never works.
I totally agree. And I think this is a good. Obviously, McGill's great school, but not necessarily a target for all the banks. Not target for all the banks. So I think in some sense, there are a lot of lessons here where, look, a lot of this is things have to kind of go your right way, whatever. But, you know, if not for Goldman, I think, you know, you were probably positioned to go to kind of any of the banks. So just kind of being prepared up front with your you know, what you need to be prepared in, but also knowing people in the industry, et cetera. We'll get to interviews in a second. It's like, what do you remember about your interviews, you know, when you were interviewing for banking? So like the process, I guess, from McGill, but generally maybe, you know, at GS was even, you know, you get a group of people applying. The biggest challenge is frankly getting from the application, you know, to the first interview. So what are things that people can do? We talked about networking a little bit, but what are people? We'll get to interview in a second. But what are things people can do from that point when they submit a resume or before they submit their resume to kind of get it on the short list of the recruiting team?
In my case, and I mean, it was the case at Goldman, and I assume it's the case seeing it from the other side. Like if you reach out to people, alumni from your school, like those people have a say in helping people get in the interview process, because they're going to be like recruiters are going to ask them like, oh, you went to McGill, like we had those I don't know 20 candidates that applied from McGill, like do you know about like the stuff they were involved in, like their extracurriculars, their grades, like what do you think that means, and like do you have a couple you recommend? And obviously like it's easier to flag that like, oh, I spoke with these 3 people, those who were really sharp, like I recommend that we give them an interview. Like I have no say if they're getting an offer, but at least I'm putting them in the interview process. So I think reaching out to alumni from your school, for especially like for a non-target school, like that was extremely important. going back.
And then the resume itself, like what do you want to put on it? Your experiences, how do you position that? I guess, we as on the other side, like having looked at probably thousands of resumes now, what do you spend? Maybe like 2 minutes max on a resume,
yeah,
right?
It's so unfortunate. I remember when I was in college,
right?
And people kept telling me like they're gonna look at your resume for 10 or 15 seconds, and I was like, that's ridiculous.
And then you put hours and hours of time on it.
Yeah, exactly. And to be honest, it's very sad, but I do a lot of recruiting now for Softbank, and I get, I don't know, 20 or 25 resumes every week. Like I definitely do not spend more than 20 seconds on a resume. Thanks to that doesn't mean that like your resume, like hundreds of people are gonna look at it. So like your resume needs to be perfect in a sense, no typos. A typo is like that person did not take time to review their resume, like that is not. So make it reviewed by a lot of people. That's like a no-go for sure. Definitely gonna look at grades. Definitely gonna look at like some form of interest, especially now at the VC, like where people have had jobs, like some form of interest in finance, whether it was like they wrote articles like about investing in one of those blogs, like they had internships, or like they had a good banking job, or they had a good consulting, or whatever it was. Like they have some form of interest, and then like I'm gonna look also at like activities and skills they put at the bottom.
Yeah, I mean, I think like leadership and like
resume. The thing that I'm less likely to read are the sub bullets describing all your activities. If you want to have something pop up, like make sure that it's very targeted and like not passive or like descriptive, more like action item and results.
I think a couple other things that I totally agree with that. I think it's not actually absolutely right. Kind of background, and as you get more and more in your career, which whatever, I think it's more on the experiences. But I think if you're an undergrad, your school background, the types of things you're doing in school, leadership, and kind of involvement in the different things that you're doing, your grades, and then obviously the types of experiences you may have gotten, and then kind of one part B to that is like what have you done in them without kind of if you've worked somewhere. I think showing progression in a job and things like that I think really help. And then on the activity side, like being leading things or putting things together or bringing together groups of people around a common cause. I think it really helps for me at least to know what drives this candidate. What are they really passionate about? So now let's get to kind of, all right, you're on the short list. And then I think the other thing that Olivier really mentioned is, again, the idea of networking and getting to know people on the team, super important. I think I stress this a lot with students when I talk to them. The recruiting team, in some sense, and people at these different firms are the gatekeepers, right, to the thing. Did you do hire review at all, or was that before? Was it after you?
No, it was after me.
After you, okay, fine. So we'll skip that. But it kind of interviews itself. How did you prepare for them? How, what are things you wish you'd known? What are some surprises? I don't know. Like what can you share about your interviews? What do you remember?
It depends on what you're interviewing. But like banking is fairly, like the interviews are always the same. Like, it's like they ask you similar questions. Like there are a ton of.
Then what makes the difference between candidates?
So I think it's like having one angle where you're different than other people. It can be like I was super successful in sports. I did those extracurriculars, or I was in those nonprofits, or I'm just super passionate about finance and investing. Like I've been eating and reading finance books like since I was 14. Like that's an angle. Like your angle can be anything. Find what your angle is, where like you're gonna come out of the interview, you're gonna have like the technicals and all of it, and then people are gonna remember you for that one thing. Oh, I spoke to that person that did like 3 months in Southeast Asia and like worked in this thing, or like whatever it is. Like having that one small thing that's gonna make you different than all the others.
Yeah, I totally agree with that. I think the goal there, right? And look, all of these are challenging, but I think the goal is once you get to that spot, obviously nailing, like Olivier said, they're all very consistent, nailing your technicals and all that stuff. But really, what is that person going to remember one or two things after the interview? Because we know, right? We go through 30 interviews a day and we'll interview, 15, 20 candidates, whatever. And then end of the day, we now go through the list of, all right, how do we get from 30 down to 5 or 6? And I think having, or 10 or whatever, I think having those, all right, this person did this thing really cool. This person was a star athlete. Like this person wrote a thesis on something that was interesting, or they were ahead of something.
These people were writing papers on like investment, like they wrote in a blog like 5 or 6.
And it's natural to you, right? You spend 2 or 3 years doing something that you're super passionate about. It's kind of bringing that across in the interview. Super important. All right, so now let's I guess transition. We're covering a lot of stuff, right? I think a few questions have come in, so I'm just monitoring those. When you kind of, so we'll get to, actually let's go to investment banking. So now you are at a summer, right, in investment banking. So maybe talk about very different, I can presume, from the sales and trading. So like, what did you learn from the prior experiences that was helpful, and what do you recommend for people going into summers in banking or finance, these kind of client-facing jobs, very high stress, you know, very demanding people that you work with. Like, what was some of the surprises the summer, and kind of how were you successful in getting an offer?
I think the most important thing for sure is attitude.
Yeah.
Coming in and being willing to learn, and like, even if you think you know things about finance and like you think you're taking finance classes, like you're working with people that have a ton of experience and you know basically nothing. So like coming in willing that you're gonna make a lot of mistakes, and it's fine as long as you're willing to learn from them. Right. And being super positive, especially as a summer and even full time as well after, I think makes a really big difference. Like, it's so pleasant to work with someone that makes mistakes but always has a positive attitude and is willing to learn and is improving, versus someone who thinks that they're on top of things. They come in, they know all this stuff, and like they have kind of a bad attitude coming in. I think that's a single biggest differentiator during a summer, because they're hiring you for your potential, not for what you know. Like they assume that no one knows anything, or like they're all gonna know it anyway after 2 or 3 months. Right. So it's more like, how do you see that person evolving over 1 or 2 years? And
yeah, no, that's true. And so what was like some of the surprises for you over the summer? Like, was it, I think it was some of the, I mean, I'll let you answer it. And then I think, what did you come in here like, wow, this is different. Like, what did you, you know, what was your, you know?
No, I don't know. I mean, you work hard.
Yeah.
I was expecting it, but it's tough. Like, I felt like, I felt like I was working, I felt like I should apologize now. I felt like you're at school, you feel you're working hard, you feel you're smart, and then you come in, first of all, you feel pretty dumb because like people know more and like they assume that you know, and sometimes you're just like, I'm not catching up with what you guys are doing. And you work hard, because you're inefficient and because your workload is also super high.
Yeah.
And so it's that being used to that is tough, and like banking is a great place to start your career, but it's a very demanding place and frustrating sometimes. And so that's something on the negative side. I guess on the positive side, like you work with very amazing and talented people. And one of the good thing about like banking or consulting, just to point out those two, is that they are very like centered around training individuals. Like they know that people come out of school, they don't know much, and everyone, like you're going to work with a lot of associates, a lot of VPs, a lot of managing directors. Everyone is willing to invest in your learning, and that's kind of like, you take that for granted, but that's kind of because you come out of school and that's what people do at school as well. But it's really cool. It's very different than like moving on to another job where like people are not there to teach you stuff. Like if you want them to teach you stuff, you're gonna have to go out of your way to get them to teach you stuff. Versus like in banking and consulting, it's natural. Like you don't know anything, so we're gonna teach you everything you do.
Yeah, I agree. I think the training culture is
really
yeah. And I think actually it carries over to a lot of, even now, I think some investing companies are recruiting earlier, and I think even corporate finance is a role where I think you get that training up. I think the one difference is being in a client-facing role, I think amps up the demand of your time, etc. Because I think that the things you've talked about are all kind of the internal pressures, and as a summer analyst, or maybe a little bit of a first-year analyst, you're a little immune to the external pressure that's coming in from the client. And I've said this a lot, right? In some sense, you're hiring a lot of these, advisors, etc., to advise on some of the most challenging issues that a CEO has for his company. Yeah. So you can imagine the stress that's kind of
and it trickles down to you. One thing that shocked me, and I guess I remember, is people spend so much time making sure that every single piece of work is perfect, regardless if it's like a small internal memo. I was like, why are we spending so much time in like doing 10 or 15 turns of this small presentation? And like you get used to it. You get in that mindset where like every single piece of work you do needs to be perfect, and like having 98% is not good enough. Like in the sense like you're gonna have a 20-page deck, and like if you have 4 mistakes, like that's what the person is gonna tell you and gonna remember. So
it's actually a really good point.
Yeah.
So that's actually a really good point, because look, again, I think we should all strive for like a level of perfection, etc. in this, but I think one of the things that I also remember from having trained in that field, and I think this is true in banking, consulting, and a lot of some of corporate finance as well, is that focus on getting it 110% correct, and actually even going kind of up. Then there's going above and beyond. I think it really trains you to think that way, where I think you start expecting and doing things in that way. So I totally agree.
It is frustrating sometimes.
Yeah.
Especially as an analyst that is doing all the work, and you're like, why are we spending or like spinning our wheels on this? And then, but it's good. It's a good training. So then
the next question I have for you, and one of the questions that came in, kind of, what is the day-to-day of an analyst, in investment banking? Maybe talk to a little bit about that, because folks are, I think, going in wide-eyed, but in terms of a little bit unsure about what do you do on a day-to-day basis. Obviously, it depends on the projects you're on, but kind of talk about your experience.
I mean, it depends a lot on the project you're on, but like it's going to be a mix. Like you're going to be in Excel and PowerPoint and Outlook for 95% of your day.
Yeah.
So responding to your emails, building like models and like making presentations and slides and training slides. You're rarely, especially in banking, when you start, like you're rarely going to be told like, this is a blank Excel, like you go build this model from the ground up on that company. Like you're going to be told exactly what to do, and like you're going to be refining work and making presentation, and then like your associate is telling you, your VP is telling you what to do, and like you're executing on those tasks. As like you move on from like initially being in more an execution mode, and you have meetings along the way, obviously, like you're going to join calls, you're going to have meetings with like people internally. Sometimes you're going to get invited to client meetings. Not that it happens often, but like it happens as well. And then over time, as like you become more confident and people trust you more, like you get more leeway and then invited to more meetings. You like run with stuff, and instead of like telling you what slides you could do, they're going to be like, we have this meeting coming up, like, do you want to take a first crack at it? And then you come up with a presentation. So like it evolves.
It evolves over time. And I think one thing, I think a lot of people wonder, like, how do you start establishing yourself? You hit this point, right? How do you start building that trust that other people will have in you, that, you know, you get more and more responsibility, you get more ownership? Like, you know, how do you develop that?
I on that point, when you're in school, you get that confirmation every other week that you're good, because you do an exam, you do a test, you get a grade, you're good. I'm good. Everyone tells you you're good. Right. You start in banking or any type of job, and that was the toughest transition. Is no one tells you you're good. You actually feel pretty shit because you're like behind everyone else, and it takes like months to build trust with people and making them feel like you can be reliable. And that's tough. Like when you're grinding late at night and you feel like you come in the next morning and no one is like, that was an amazing job. They're like, thanks, let's move on.
Or here's a couple mistakes.
We're like, oh, you forgot this. We're like, that's how you did. Let's just kill it. And you're like, why am I doing this? And it takes time and it's super frustrating. So the first few months were tough. I remember like the sprint from like when I started in September all the way to Christmas, and then I worked over Christmas, and I was like, this is really tough. And then you build it over time, though. That's a good thing. And so people, like, if you're doing a good job and like you're willing to learn from your mistake and you have a positive attitude, like people are going to trust you more and more, and you get more of that confidence and more of those, like, you get to pick the projects you work on. You get more leeway and autonomy in terms of the work you do. So
yeah, I agree. And then one question we got is like, how do you make that switch into owning things? Because I always tell students, right, like, or folks trying to work, the biggest switch you can make in terms of getting people to trust you, rely on you, start owning pieces of things, etc. So how did you build up the confidence to start owning things?
That it's tough. Banking has a lot of positive side.
Yeah.
I don't think that's at the analyst level, that's something that is extremely encouraged. Like you're going to own this piece of work. And the reason why is you execute, you're being told what to do. And then the associate is going to review it, give you comments. The VP is going to review it, give you comments. The MD is going to review it, give you comments. And by the time it gets to your client, you're like, if something is wrong in that presentation, like it's not my fault. Like 4 people looked at it, like it's not their fault. So like you become more, it's bad. I think like you own less of your work. So I think it's important to keep that mindset, because when you move on to something else, like now I own all the work I do because no one checks my work. Yeah. And so a lot of positive side that I learned from banking, but owning your work, it's a mindset that I think is
and I think the one thing I will say, like owning your work, maybe parts of the work, right? So owning the model, exactly. Right? Owning the model, or owning this process thing, or this diligence stuff, you know, whatever. I think a lot of the ownership you get is on the financial side. So, you know, you'll own a financial model, etc. And I think the responsibility, and really onus is on us as, you know, kind of professionals, is to just kind of own every part of it. Don't assume someone's going to look at it, etc. If someone asks you, you know, why are these assumptions being used, or, you know, whatever it is, you should have a good answer of kind of why you're doing it. Sure, you'll have support on it, but I think just owning that piece, and that I think builds over time people's like ability to trust you in the things that you do, right? So
and that was a tough transition, not just owning it, but like when you're in banking, I was producing presentations. My work was to make sure that those presentations were perfect. My work was not to internalize those presentations and have a view on what I was doing.
That's fair. Yeah, that's fair. Yeah.
You move to something else, and now VC, it's like no one cares if my slide is perfect, but they care at all what I have to say about the slide and my opinion. Yeah. And it's a very tough mindset to change. It's like, came out to my first meeting, and it's like, well, you're leading the meeting. Like you go like, what do you want to present? I was like, I did that.
Okay, cool. And then another question, right, from like, so we talked about kind of the attitude as being the differentiator. I agree with that, a lot of that, and then the ability to kind of learn from mistakes, et cetera, this summer. What are the differentiators when you get to being a first year, you know, on whether you kind of rank at the top of your class, or or on track for promotion, things like that? What can people, or just generally have a good reputation in the firm, right?
Yeah.
What are
I think like obviously there's like your hard skills, like and your ability to do good work,
right.
and that is not something that is like you're born with it. Like you develop that over time, and I think like having a positive attitude and being able to like go seek out feedback early, show that like you're committed to it, show that you're interested in learning, show that like you want to take more as you become as you become good at some parts of the work, like you go out of your way, like, can I join that kind of meeting and present that side? Can I do this? Can I, and showing that you're willing to learn and move on, I think is what I think people are looking for.
Yeah, that's fair. Maybe talk a little bit about the work-life balance in banking. Like, how did you, obviously it's like I think people should go into careers with eyes wide open in terms of what to expect. And so I think it's important, if that's, that is a consideration. I think people need to know that. So maybe talk about a little bit, you were recently in it, kind of how what was your assessment? B, how did you come to terms with it?
I was going to say, so that goes back to the point where like, you got to make decisions that are right for you. And I don't think there's a perfect career path. Like I've seen, it's unfortunate, like I've worked with people, I've seen people get burnt out a year out of school, and people after 2 years calling it a quit, like finance is not for me, this is not, and maybe finance was for them, they were just not in the right role for them, and like they got burnt out. And so you got to be very careful with that. Like you get the fact that we are having this conversation and you guys are in college, it showcases like that we're in a pretty crazy world. Like you need to think about your career like a long time in advance, and it puts a lot of pressure on you. And like you think you're doing the right thing, and like you think going to banking, for example, is the right thing for you, and then you think that like you're 3 weeks into your job in banking and going to recruiting for private equity is the right thing for you, and now you're like, you look back and you're like, shit.
4 years I was just getting what did I do?
Making sure that you're making the right decisions for you and you're doing it wide open. Like there's a lot of positive things about banking. Work-life balance is like the toughest one, and you think you work hard in school, and like you probably do, but the toughest part about banking, it's not only that you work hard, it's you do not control your schedule at all. Like you're going to be asked, can you do this? And it needs to be done ASAP. And it's always the case, which means that it's Thursday night, you're supposed to go meet with your parents or your friends, and people are like, we need you. So you're going to end up working. For me, it was December 23rd. I was told you're being staffed on that project. It ruined my Christmas and my New Year's Eve. And you're at home working literally on your laptop when your parents and your girlfriend and your friends are having fun downstairs. Like it's tough. It's really tough. And add on top of that people are not telling you that you're doing a great job. They're just taking for granted that what you're doing is normal. So it's tough. Like you're gonna have all-nighters, and it's not cool to have all-nighters. Your body feels like shit. That you feel like garbage. So there is some tough parts about this job. Would I do it again? Yes.
Fair. And how did you address it? Because I think maybe it's in phases, right? The first 6 to 8 months of the job, it's really hard to push back, and you kind of take what it comes. I think your second year, you start developing a little bit more of like, all right, look, this is areas, like I'm going to carve out time to do this and this in my schedule. Like maybe talk a little bit about how you structured your analyst years to kind of at least do the things that you want.
I think it's like people sometimes do not know what your reality is, in the sense that like they don't know that you have a dinner Friday night, or they don't know that like having this weekend off is very important for you, or they don't know that you haven't slept in 3 days and sleeping is important. So I think doing it in a nice way, but being able to voice it and communicate it. Communicate, just telling them like, listen, like I'm willing to do the work. Is there a way we can compromise or like find a time that works? People will respect you as a person, and if you're doing it in the right way, will appreciate the fact that you're raising your concerns rather than waiting, and then do it.
I think the other totally good communication, and then also even in summers and summer internships, etc. I think the key around the ability to say, hey, I have these 3 conflicting deadlines going on. So like, how should I help prioritize it? It's not that you don't want to do the work. It's just you want a little bit of help prioritizing these things because you're kind of being pulled 3 different ways.
The best piece of advice I was given was, when you're given work, especially in banking, double the time you think it's going to take you, and then give it as a deadline. So like, if I'm being told by 3 different people at the same time, like, can you do this, this, and this? Like, yes, I'll do it. Is it okay if I get back to you in 24 hours? I have those competing deadlines, or like in 48 hours. And then especially if you give yourself more time, like you won't feel as stressed because you're going to have set the expectation, and you're probably going to be able to deliver or over-deliver on those expectations. And then people feel that they're always on top of things. So like, voice it over. Just
So,
like tell.
and the age-old quote, like under promise, over deliver kind of thing.
Exactly.
I think holds true. The other thing I would also highlight there is, and look, we're kind of getting the nitty-gritty of like the work itself, but if you have, I think a lot of the time spent is when people don't understand what's being asked, or are really struggling with like capturing, and it's gonna happen. Look, we're all gonna make mistakes, but we're also gonna be in positions where there's gonna be ambiguity, etc. So I always kind of, I always advise people, look, spend a little bit of time up front if you don't know what you're doing or trying to solve the problem. But if it's gone on for like hours on end, I think it's fine to raise your hand and say, hey, like, this is what I think the problem I'm trying to solve is, but it feels like that's going to take 3 days to do. Am I thinking about this right way? I think a lot of people end up investing time because they're afraid to ask these questions, and then end up wasting a lot of time, and then it ends up being inefficient, right? I don't know, cool. I think we have a few more minutes here. I want to and maybe spend just a little bit more time as you kind of think, you're in college.
Yeah.
Did you, or do you think like people want to have a 3-year plan, a 5-year plan, like how do you holistically think about the first job out of school, your internships, your first job out of school, and then I think we're operating, in an environment where, look, finance and consulting are very competitive. So how do you kind of think about the entire landscape of what the different types of experiences, the best job you can get, and then do you plan for an MBA? Like, what do how do you think about your 5-year plan?
I think it's good to have. I mean, I've always been the type that had a 5-year plan, but they changed along the way. Like, I did not think I was going to do BC after banking, and here I am in BC, and now I have a plan for after, but it might change as well. So I think it's good to think about your different options and consider the jobs out there, and be willing to do stuff that other people like different off the beaten track.
Yeah.
I think it's good. Like you have your plan, and then it changes over time as you get more information, and you realize like this is for you, this is not for you. Like I went into banking thinking that might be it. Like banking might be for me, and then I was considering sales and trading, and then ended up in DC. So like there was a lot of stuff where like you navigate.
And how do you battle the whole grass is greener, right? I think a lot of people think like So maybe talk a little bit about that. How do you think like, oh, I like 50% of my job, there's 30% of my job I don't, or even going in, you're like, oh, I think I want to do banking because everyone's doing it. So how do you battle that?
Grass is greener is the biggest problem you're going to face.
Yeah.
You're in school now, you see people, oh, they got this job at Goldman or Morgan Stanley or Powell Weinberg or Evercore or whatever the firm is, or like one of the big consulting firms. It's like, oh, wow, they have the life.
Yeah.
And those people are like, oh, shit, those people move to private equity. Look at their life. Like, it's amazing. And then the people move to private equity and they're like, I'm tired of it, of finance. Like, look at those people in startups. Like, they get free lunch and like they work like 8 hours a day. And then people work in startups and they're like, my job is too risky. Like, the startup is going to go out of, and then they circle back and it's like, there's always going to be a better job than yours, and it's not actually. You think there's always going to be a better job, but it's not the case. It's like all the jobs have their pros and cons, and it's more like what you're looking for.
Yeah, and so I give the last 1 or 2.
And right now is a market where like there are a lot of jobs, and people like think about those. Like, markets might be different in 2 or 3 years. Like, you guys are in school right now. Like, I mean, is there going to be a recession next year or the year after? Well, likely.
Yeah.
Market correction.
So are there anything students can do? I mean, like to prepare themselves? I mean, we don't know, but in terms of a job, like, the job market's been great the last 5-6 years. So, but it's also been kind of, so what are, it could be scary coming into a job market when it's in a recession. So anything students can, I mean, you don't know what's going to happen, but anything people can do in terms of what are the types of classes they can take, or what are the types of mindsets? I mean, what's some advice you may have?
I think it's been, I mean, I wouldn't call it building your resume because I think that, or talking about like exploring different things and showcasing that you're interested, whether it's in finance or whatever you want to pursue, so that you're best positioned to pursue that career track whenever it opens up. Right?
Yeah.
I think there are a lot of them, like we've talked about banking and consulting, and I don't want more about banking, but I don't want to take it for granted that these are the best jobs out of school. It's not the case. Like, there are a lot of great jobs.
And you work a lot in technology, right? So I mean, 2 questions there. One actually we had from someone who emailed was around how is technology going to impact these finance jobs of the future? So maybe you work a lot, you see it on the other side, you invest in companies that are like the Slacks and Ubers of the world. Like, so how do you think technology is going to impact like finance jobs?
Yeah, I mean, it's definitely impacting every industry. I don't know how long it's going to take to replace like the client facing or like the people side of the business. Like, you've seen it especially in like trading, for example, like quant trading, and a lot of machine learning algorithms that brute-based human. So like you definitely see it evolve over time.
Right.
But I mean, there's still going to be a lot of finance jobs.
I always say that, like, I think it's helpful if you have the ability in undergrad to to build skills in some level of technology, whether it's information, kind of some sort of something that's interesting to you, but definitely helpful to kind of balance with the finance degree, etc. So that's one thing. The other thing is, I think one of the two skill sets in finance that you build up towards over the career isn't the financial modeling or the market research and things like that. I think it's the ability to think about companies and strategies and understand and build them. And then number two is to make investing judgment decisions on these things, which both of those in terms of strategic decision making, look, I think we can argue whether that's going to get disrupted a lot. But I think that understanding business and that part and the people dynamic, and then the idea of kind of judgment around investing decisions are very hard to disagree.
That's one thing we haven't discussed, but investment, like building that mindset around investing, like you can do it now. Like you probably have a bit of money on the side, or like doesn't need to be a big amount. Like open a trading account and start trading like that. What makes a good investor is pattern recognition and being able to like recognize stuff that you've seen and being able to build that mindset. And like I love trading, and I started trading before I got in when I was in high school. I traded all the way in college. I stopped trading when I was in banking because you cannot trade when you're in banking, so it was pretty sad, and then got back to it when I moved to DC.
I think in addition to that, another thing I advise people to do is pick up a company's like earnings report or presentation or 10K and learn about the business models of these companies, right? I think that's whether you go into banking, consulting, finance, as in undergrad, right? I think understanding how companies work, how they make money, what kind of strategy they have, how do they actually operate, how do they actually make money and succeed and influence the competition is super important. So pick an industry that you like.
That's what Warren Buffett spends his day
doing. Exactly.
So.
I think people don't do. I think that's the one thing I advise, and the other thing is look at industry publications, like get subscriptions to Wall Street Journals, deal books, etc. It's going to be really challenging up front to do, but I think over time it actually really helps. I want to spend
just to give you on that point, just to give you an example. When I interview people at Softbank, my favorite line of questions is, "What's your favorite Softbank investment?" So like by asking that question, I kind of probe if they've been looking at what Softbank has been doing, and I want to see also what their answer is. Like, are they going to take Uber? Like everyone knows that Softbank owns Uber, but like, what are the other? So like, they come back, I don't know, Clutter.
Yeah.
And I'm like, okay, what are the 5 things that you would like to know about the business to decide if it's a good investment or not?
That's a great question.
And so like, even obviously it's private companies, so I don't know, like it's tough to find information out there, but I want to see what's their mindset. Like, what are they thinking about? So like, especially in DC, I would be looking for something along the line of like, at least a question about management, at least a question about like financials, revenue growth, like gross margin, contribution margin, or questions around like unit level economics, like terms that are like specific to DC, but like customer retention, lifetime value to customer acquisition cost, and definitely one about valuation. Like a lot of people do not ask, like, if I'm making an investment, what I'm buying is not just a company, like I'm buying it at a certain price. So, and then we double click and we dig into it, and then it allows me to like check if they did their work on Softbank and check if like how do they think as an investor.
That is a great answer, because I think that's a great point. I think actually that's a really good question, and it gets to a couple of things. So what are the questions you'd like to know? One is your curiosity about, number 2, how you think as an investor, like what are the areas you're going to diligence if you're going to make this investment? Number 3, like valuation, like, well, how are you going to financially understand this model, etc. Number 4, management, like understanding, like, is this a good strategy? Is it good? Because I think as a private equity, venture capital, or even in banking or consulting, the strategy and the management team is like 50% of the execution ability, 50% of skill. I think that's great. I think just being prepared, and the way you can prepare for those things is just understanding business models and critically thinking about them. I think personal trading or not, critically thinking about what makes things. And a lot of the folks in this room are in investment groups, etc. But I think continuing to challenge yourself in that environment really is great.
And by the way, if that's something that doesn't interest you, then maybe like private equity or venture capital is not for you. Like you're able to test out. And like, there are a lot of amazing jobs out there. Like it's not, you can decide. Like I remember when I was in school and discussing with friends, like how can you decide if it's the right job for you or not? Well, test it out. Like you can do it on your own to a certain extent, and then you realize if it's for you.
I agree with you. I think internships, school year internships, or just understanding and talking to people what they do is a great way to figure out if it's for you or not. Last thing I'll say, kind of, I'd be remiss if I didn't ask you this. So kind of as you think about just kind of forgetting recruiting, for instance, but kind of putting your investor hat on, right? So what do you think, from the tech side, investing side, what are things that really are exciting to you as an investor in the next, like, call it 3 years, 2 to 3 years?
Oh, that's a good question.
Yeah. It could be
I don't know.
trends, it could be, you know, industries, I don't know, any.
I'm afraid, I mean, it's not something that is exciting, but I'm afraid with valuation right now.
Okay.
I think
as
the,
we all are,
the low interest rates means that there's so much money that is being deployed across asset classes like public markets and alternative asset classes like private equity and venture capital, and there's so much money chasing so few deals that it's like everyone is throwing money after money, and it's like I think valuation is super expensive. So as an investor, extremely worried on that side.
Yeah.
It is what it
does
is.
Does it mean then you're just trying to be much more disciplined and like obviously
I think you gotta
like you don't make as many deals and you kind of wait as plays out. I agree with you. I think early part of the cycle there were a lot of good businesses that came more. I think as we get later and later in the cycle, you get less great business models, you less great deals, and I think then but you still have a lot of money.
I'm not saying it's 2001 or 2008, but it might be. Like history doesn't repeat itself, but it's similar.
And then from the tech side, you're seeing pretty much tech disrupting a lot of businesses. Well, some of these businesses maybe don't make money yet. Like, so what do you think that is that going to, in terms of like, are you looking for pattern to profitability? Are you looking for kind of just take as much market share as possible? Like, what do you look at?
I mean, in terms to go back to your initial question as well, like tech trends, I think like autonomous driving is one that's pretty exciting. Super early stage.
But how far away do you think we're from that?
Probably in terms of commercialization and the early models, like definitely within 5 years.
I agree.
I've been spending a fair amount of time in agriculture tech. All like vertical farming, all the novel forms of meat, like I'm sure you saw Beyond Meat that started trading in terms of like the plant-based meat or cell-based meat. Like there's a lot of exciting stuff out there to feed the population. And what I like, especially as like a VC investor, is like finding problems where like you feel you're having a tangible impact on the world, and like being able to feed the world population is key. And there are a lot, I mean, we live in the US and like we don't realize it that much, but there are a lot of countries that are not having access to like the fruits and vegetables that we're getting access to, or like the meat. Those trends are pretty exciting.
So that you're saying that like fundamentally kind of looking for companies that fundamentally solve a problem that's a problem with like a kind of innovative way, kind of not looking for a kind of a innovative thing, but not necessarily a problem.
I think the problem, especially in the world we're right now, where like tech is so hot and there are so many startups, like people are like, I want to start a startup and then I'm going to find a product and then that's it. The thing is, you need to start with the problem. Like what is out there? Like how can I impact or like change the world, and what is missing, and then back solve and like create that product. So
that makes sense. So got it. Autonomous driving, etc. And then as an investor, I think valuation, management team, strategy. It's a very like cluttered market in a lot of areas. There's a lot of companies, and how do you determine which company strategy? Because I think VCs was hard in that sense, right? Like maybe 3 out of your 10 bets are gonna play out. You know, and then every space is like super early stage B, you know, Series B, Series C. You don't know like how this product's gonna go. So how do you get confidence around that?
It's so I mean you would look at a P&L and the financials and you'd be like, that business is losing money. Like,
how do you value my business?
I think like a mix of like what the growth trajectory has been plus the unit level economics, so like per customer, whatever the measure is, like what does it look like? And as the business scales and like all the fixed overhead costs and fixed technology costs is being amortized over the business, what does it look like? And what can I expect like 5 or 6 years from now in terms of like steady state margin for that business? Is technology adding value, or is technology just an additional cost making it a worse business model? And management team, especially in VC, is key, and like that's something that I did not know coming in VC, in the sense that like I had not seen a lot of management teams, and now like you kind of see after 6 or 7 months, like seeing multiple companies per week, like you get a pattern recognition of like what you're looking for in a management team and their ability to execute.
So last question on that last point, like how many companies do you like? Just we can make this round numbers, right? Like how many companies do you see in a week or month, right? Just people calling you to invest. How many companies do you take meetings with? Just give people like a general sense of the market. And how many people do you take meetings with? How many people do you do the work on? How many people do you like take the meeting, whatever? And then how many people invest in, right?
That's a good question.
It could be very rough.
I mean, in terms of, I would not call just people that reach out to me, because often like I'm reaching out as well. So in terms of like businesses that I'm going to look at, like a list of companies every week, like at least 50 to 100, like that I'm going to read about in the news, or like screens, or like people reaching out. So a lot of volume, and like get a quick sense quickly, like if you're interested or not. In terms of setting up meetings, depends from 1 week to another, but like early stage would be a lot, like probably 20, 25 companies. At our stage where we are at, like probably 5 to 10.
Makes sense, yeah.
Companies that are meeting every week, like an hour or two, and then double clicking with those companies, like if they're in a fundraising mode, maybe 1 or 2 per week, and then if you double click, really,
funnel, right?
it's like it's a big funnel,
exactly.
and then it goes down.
That's I think helpful for people to know, right? Like you're looking, that's one of the cooler things about jobs like this and private equity, et cetera, investing, is you look at hundreds of business models on a monthly basis, right? And then you say, okay, this is gonna work, it's not, and yeah, you're not gonna know right away, but you're gonna be like, look, this isn't gonna work, and whatever, and then you start making judgment calls. And I think as a young professional, that's really cool because you are just making the judgment call based on what you know and what you've learned. And then moving on, and then maybe coming back to it. So I think, exactly, and you learn, the ability to learn is just so much there. So we're kind of at an hour. I try to get as many questions that I got over email and that I had beforehand. I really, want to thank Olivier for his time, and the folks that obviously weren't able to join live, I think we'll put this one on the podcast as well. But really thank you, Olivier. Amazing insights on venture capital and the whole career path. And thanks everyone for listening as always. And we'll have all, exactly. Thank you guys.